Hello and welcome everyone to this important strategic update on the stock we all love so much because it represents the eye of the storm of the AGI revolution, which is, of course, Tesla. Now, you know, I have one of the most talked about valuation models on Tesla because I'm making pretty clear and bold predictions on all the future revenue streams, specifically, of course, Optimus, the humanoid robot. And what you see here, the beautiful, beautiful robotaxi that just launched in Austin and San Francisco and will expand all over America and the world. So why is it time to take a closer look at that valuation model so we can predict the future of AGI, of artificial intelligence, and of Tesla more accurately? Well, because a lot of things are happening. And so I made a major tweak to the model that I want to share with you. And I think this model helps us to understand much better now what future scenarios we are looking at for all of us as humans, as artificial intelligence users, and of course, as fans of humanoid robots and autonomous taxis without drivers that drive us all over the place. So what is happening right now? Let me give you a very quick situation overview. We have the robotaxi rolling out. It's, in my opinion, will be in over 10 metropolitan areas by end of this year. According to my seeding strategy, we see Austin, we see San Francisco. I think Phoenix is in the works. Multiple Florida locations are in the works, and New York is in the works. I think there's more in the works, but we know these are coming very rapidly. We also know that Optimus version 3, the humanoid robot that will be able to perform any task you ask it, like a human, very, very soon, sooner than people think, is brewing and it's coming, and it's probably going to be launched very soon around December, in my opinion. We also see huge AI moves on the chip side with AI6, where Tesla announced a strategic alliance with Samsung for $16.5 billion initially to build the Texas fab, the chip manufacturing plant that will allow Tesla to build its own inference AI chip with a little training capacity to put into the robotaxis and into the Optimus robots and have millions and millions of one of the best real-world inference chips in the world built together with Samsung. That's a whole different video, how it got to that, the role NVIDIA plays in Tesla's master plan, and why they shut down Dojo. But not in this video. It's just a lot happening. And of course, we see the core business of Tesla experiencing key moments. Strong Q3 coming up because of the expiration of the tax credits. People are rushing in to get these Model Ys and 3s. Q4 then will face a major challenge because these credits are gone. But Tesla, just in time, they got lucky this time, will launch the affordable models. The affordable models, probably sub $30,000 models. Model Y stripped down exactly at the first day of Q4. How do we know that? Because they delayed the launch because of this whole situation, that the demand is skyrocketing right now for the existing models because of the tax credits. And so they delayed it to the first day of October, probably, to launch these affordable models and compensate for that tax credit. So this is very interesting. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. And what all of that means is we need to really get serious about the model. The future is now here. I built the model last year. Now we have to split it up a little bit. And the key message I have for you guys is that I created a scenario model, which means we are not looking at just one prediction, but we will look at 3 predictions. That's how the pros do it. Once the pros have a model like mine, which they unfortunately normally don't have. But we do it now, and we have 3 scenarios. What does it mean? I will show you what it means. Let's go right into it. We go right into the model here, and you will see the whole updated scenario. I will zoom in a little bit. So first of all, ignore all these tabs here. We don't need that. But we have a base model, we have a bull model, and we have a bear model. Very quickly, stay with me if you know these things, but stay with me. Why we are splitting it up? Because no one can predict the future with total accuracy. I'm pretty good at predicting it, but not with total accuracy. So we do it probabilistically. And if we do it probabilistically, it just makes sense to split up the future into 3 different cases, right? Scenarios, because different things can happen. The base case scenario in stock predictions and modeling just means this is what I actually expect. This is my base case, a little more conservative than my base case, slightly more conservative, but that's what I'm betting on, the base case. Now, since it's a little conservative, it makes sense to have a bull case when things get a little easier and a little faster than I predict, and we can model that bull case here and change a bunch of inputs. I will show you in a second what these inputs are. I have a beautiful little comparison tab, so you don't have to go into the entire model. We will compare these on key metrics. And then we have the bear model. What is a bear model and what is a bull model? The bear model means, okay, if things don't go according to plan, if Tesla and the key revenue streams underperform from what I think they will do, how does that look? And as always, I give you the full understanding that even most analysts don't really have, what that actually means. What does it mean to have a bull case and a bear case? Some people say it's the best case and it's the worst case. No, the bull case is not the best case and the bear case is not the worst case, because the best case is a meteor full of platinum falls from the sky into Tesla's backyard and they have $1 trillion, right? It's not going to happen, but it could happen. What's the bear case? The same meteor hits the 3 gigafactories and Tesla disappears and is a zero. So I'm not interested in the best case and the worst case, because the best case is infinite money and the worst case is you lose everything. I'm interested in modeling out realistic scenarios on a distribution of probabilities where the base case is in the middle, the bull case is in a reasonable probability on the plus side, and the bear case is on a reasonable probability on the minus side. So let me explain what that means. And we go right into these cases, right? I shortcut it. Don't look at these complicated models. That's for a different video. You know that basically this entire model models out everything. We have all the inputs here, financial modeling inputs for, the discounted cash flow years. We are considering the discount rate, the current share price, outstanding Tesla shares, blah, 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 business lines, Optimus, Robotaxi, OpEx percentages, and so on and so forth. And then we go into the actual revenue and EBITDA projections for Tesla total that is built on the different sales projections of the different units. For example, here we have the Optimus humanoid robot sales projections. Then we have the Robotaxi sales projections. We also have the core business sales projections here, core EV and energy. And that all gets consolidated in Tesla total. And then this gets all discounted, cash flowed back into the valuation models. Here you see the market cap. And then this goes into the future share price. Okay, I just explained what I don't want to explain to you guys because you don't have time, and we cut it short into the comparison case. So here it gets very interesting. Let's dive into that, what these base cases, bull cases, and bear cases actually say. So first of all, what I did here is I took 2026 to 2030, the next 5 years. And then just for good fun, I extrapolated out to 2040. In these little tables you see here are just for you to quickly see the comparison, because you want to get the bottom line. You're the executives. You want executive summaries. So you see from 2026 to 2030. And then for fun, we also show the last year of the model, which is 2040. So you get a feel in each case, where are we ending up at in 15 years on these revenue streams, and what happens over the next 5 years. And then we look at key metrics, KPIs, or let's say key metrics. And the two key metrics on the revenue side, on the business model side, is Robotaxi fleet size in millions. So how many millions of Robotaxis do we actually have on the road globally? That's the first major revenue stream. And then the Optimus install base in millions. How many millions of humanoid robots did Tesla own and operate? Not deploy, but own and operate, install base, not new robots coming out, right? And then we look at revenue, very simple, the total aggregate revenue of the company, the EBITDA, the earnings, the free cash flow, very important. Free cash flow is my favorite. That's the DCF model base, the market cap, and of course, what you guys are interested in, the future fair value of the stock. And future fair value, what I call future fair value, is not what I think the stock price will be, but what the stock price should be in a rational market that understands the future. How does this future fair value stock price correlate with the real stock price? Well, the way I explain it, let me go very quickly into this here, just for fun. I don't go into that model too much, but here you see how these two things relate to each other. So the red line is the fair value of the stock. The yellow line is the stock price. And over time, the yellow line always has to approach the red line. Now, it can be delayed for years, but it's a forcing function, a pull function. It has to get there either from the top if it's overvalued or from the bottom. So that's how I think about it. Long term, the stock price approximates the fair value. Short term, anything can happen. So that's what we have to understand. Okay, now let's get into the details so you understand what I am thinking here about these three cases. Let's go into the actual numbers. I believe in the base case, Tesla will have 40,000 robotaxis active on the road in December 2026. There you have it. That's my number. 40,000 robotaxis active on the road. Now, if you're a big Tesla bull, you think that's very conservative. I think it's the base case because don't underestimate how complicated it is. We only have 18 months left, less than 18 months, probably 16 months to get there. It's very complicated in the beginning. We will then grow in 2027, the age of the year where AGI becomes probably a real thing and problem. Just as a side note, we grow to 190,000. Don't forget, these are in millions. So this is 190,000 robotaxi fleet globally deployed, go to roughly 600,000, go to 1.6 million, and go to 4 million by 2030. Now, why do I think that's a base case and not a bull case? Maybe you think 4 million is a lot. Don't forget, Tesla will have many, way over 10 million cars, probably close to 20 million cars on the road in 2030. So that's just a fifth of their cars. So that's not too crazy. We will see complete autonomous control guaranteed end of 2026. Super guaranteed in 2027 on the technology side. So in 2027, there is no doubt that Tesla will have perfect FSD. Very likely in 2026. And with perfect, I don't mean as good as humans. I mean infinitely better than humans. And then they can drive around everywhere. And that is the real reason for disruption here. So we will, in my opinion, have 147 million robo-taxis on the road in 2040 by Tesla in that base case, because there will be not much competition. Long story why, but there will not be much competition, in my opinion, because you can't catch up with Tesla at that point. If Tesla gets to 2029, 1.6 million robo-taxis with no major competitor, maybe Waymo at this point has 50,000 or something, it's just game over. Tesla will own 80% of that market and maybe Waymo 20%. So 147 million taxis by 2040, that's extremely conservative in my opinion. We will have roughly 2 billion cars in theory on the road by that time, maybe a little bit more. So that's 8%. 7% of the total share of cars. I think that is wrong and it's super conservative. But even if it is, it's 147 million is quite a lot. We have 1.5 billion Optimus humanoid robots. It's also, I think that's reasonable. That's a base case because these robots will be near perfect by 2030. And all of that translates into a lot of money. So free cash flow in 2026, 7.8 billion. It's debatable, could come lower, who knows? But that's what I believe. And then we see this massive, look at this, free cash flow, 18 billion, 43 billion, 100 billion, 235 billion in free cash flow at 500 billion revenue by 2030. And that is what I mean with the forcing function. If these things actually happen here, that is what the cash flow does. It's a dramatic impact on pure cash raining into the company. If these numbers are true, so all of these numbers down here, the financials, they're not really debatable. Only these two are debatable. If you are a critic of mine, you have to point out here and say, Joe, you're crazy. There will be not 200,000 robo-taxis in 2027. Okay, that's the debate, not this down here. These numbers flow from these. And if this all happens, if you discount down the cash flow into the present year, each year being the present year, so in 2030, you will have a market cap of $25 trillion, which translates into a future fair value stock price of $8,000. So right now we are at 339. My prediction for the base case is $8,000 in 2030. Okay, just for fun, by the way, the market cap in this projection in 2040, based on a 30x price earnings ratio, we can't do DCF because then we need to go to 2050. So let's do PE, the dumb way of valuation, would be $694 trillion by 2040. I think that's actually also realistic, but by 2040, believe me, the world will be a very different place. And that would be a 27x multiple over this 2030 share price. So just for you to get some numbers. So even if we hit 8,000 by 2030, the 10-year multiple will be 27x in that model. So you still hold Tesla. A 27x over 10 years is, by the way, not that great. There will be definitely better shares, stocks, but it could also be bigger, who knows. But if it's 27x, it's a very good investment, but it's not a brilliant investment over 10 years. So here you have the big picture over the base case. And if you follow me and see my predictions, you might say, wait a moment. Oh, did you not tell me 2030, your price target would be 11,000 and not 8,000? And you're correct. I adjusted my base case price target. Why? Because when you do something like this here, and you stretch it out, the models, into these three cases, then you have a little bit more leeway. And let's go to the bull case. What happens to the bull case? Well, let's jump right to what you are interested in. My 2030 price target for Tesla stock per stock, of course not split adjusted, we don't know the splits, I don't care about splits, is 14,600. So previously you could see my model that I had previously, it's a lot of refined now, but the model I presented previously is kind of in between the base case and the bull case. So my previous model was slightly bullish, but not a total bull case. It was between the base and bull case. So my new model in these scenarios is 8,000 is my new base case. Let's be a little conservative here. And my real bull case is 14,600. Okay, so it's basically 2 years earlier if you just compare this. So in 2029, we would have 9,500. So roughly the 8,000 price target of 2030 in the bull case. So you're basically accelerated by like a year or something, 18 months faster. So it doesn't really matter. If this works, we would actually look at a market cap of $1,400 trillion by 2040. Let's also for fun compare the end states of robotaxi fleet and Optimus installed base in 2040, all the way back then. Here we have 147 million robotaxis all the way in the distant future in 2040, 1.5 billion Optimus install base. And in the bull case, we would have 271 million robotaxis, so many more. I still think realistic. So roughly 12% of the global fleet would be autonomous Teslas, and roughly 2 billion Optimus humanoid robots, right? And that's roughly what we are looking at. If you compare the 2030 endpoints, by 2030, I would say 4 million robotaxis deployed worldwide in the base case, and in the bull case, 6.8 million. And there you see, like, this is actually a little ambitious in my opinion. 6.8 million robotaxis by 2030 fully deployed. Possible? I don't think it's likely. Optimus install base. When you understand Optimus robots, here's the problem. I think it's possible that we have 2.6 million Optimus install base by 2030, but I don't think it's likely, because if that should be the case, we would have to have 1 million in 2029 and 400,000 in 2028. I think this is absolutely freaking stretching the possible. Whereas here in the base case, we only have 170,000 Optimus. Okay, so you see these two cases, 8,000 target share price 2030 versus 14,600. Now to round it up, let's go into the deep, deep, dark territories of the bear case. Let's make it even closer here so you see all the dark stuff. In the bear case, I'm just assuming things roll out very slowly. The robotaxi fleet would be only 10,000 robotaxis in 2026. I think that's ridiculous. Okay, 40,000 in 2027. And in 2030, only 1 million. Now, here you see why the bear case is not the worst case. The bear case is a reasonable bad case, right? And we also see Optimus install base would be 1 million by 2030. Now, maybe you ask, Joe, how can you say 1 million robotaxis deployed by 2030 is a bear case and 1 million Optimus robots in 2030 is a bear case? Well, you have to understand, these are giant forcing function. The technology is more or less done at this point. The Optimus technology is also completely predictably done in 2027 latest, that this thing is perfect. And then it's just supply chains. There's enormous demand forcing functions. So A bear case does not mean that there's no Optimus or no robotaxi. They are guaranteed. There will be Optimus. There will be robotaxi. There will be millions of them. There is no possible future in a reasonable probability distribution where this doesn't happen. But the endpoints are very, very different. And that's why the valuation is only $1,877 per share in 2030. That is my hard bear case, which is more a function of the future. We say there will be massive competition. Tesla will not get the job done. And it will all end up with 360 million Optimus deployed in 2040, 15 years. So only 360 million Optimus deployed, because again, there is no possible universe where we don't have billions of robots by 2040. It's just not going to happen. We will have billions of robots. The question is, do we have 10 billion or 1 billion? And then the question is, how many of them are Teslas? So 360 million Optimus humanoid robots by 2040 means Tesla has done, they have done some things majorly wrong. And in 2040, 30 million robotaxis also means something went totally off the rails, no pun intended. So now you understand how I approach bear and bull cases. They need to be reasonable, they need to be realistic, but they need to be on the weaker end. And you see, even with 1 million robotaxis and 1 million humanoids deployed in 2030, the stock price could be justifiably only at 1,877 if there's a lot of competition and Tesla is slow. So there you have it. I wanted to share this with you guys so you understand how I think about these things. I think, it's interesting how this works. It's interesting to observe these things. And maybe to conclude it, the takeaway is you see that even the bear case is not bad. It's not a bad multiple to 1,877, given that this is the absolute worst case, in my opinion, in the reasonable distribution. Why does it matter, and what do we have to think about here? You always have to think about the alternative to this investment strategy, right? If you like Tesla, I think Tesla is a tremendous investment, not advice, but that's what I'm doing. It's a tremendous investment. It is the best risk-adjusted return as I can see it right now. But, you have to consider, what are your alternatives and macro bets? What is your macro strategy in this age of AGI? I will do another video on that. I will do more videos now outside Tesla to talk about money and grow your capital strategies beyond Tesla, even though Tesla is the centerpiece. And in that strategy, there are 3 mega trends, not stuff you hear from other people, but here you hear my 3 mega trends for the future. And these mega trends are, of course, artificial general intelligence. I do believe it's also the age of crypto for many reasons that go far beyond finance. And it is the age of pioneer empowerment through capital, through culture, and other things. And the question is how you translate that into the right portfolio. I will just give you a quick overview. We are not going into details. That's a different video. Follow me on the channel, subscribe. Very important if you want to get empowered in the age of AGI. But we are talking about NVIDIA, beautiful stock. How does it compare to Tesla? We are talking about Palantir. I have many problems with Palantir, but I do think it's a big winner. What do we think about Microsoft and Google? Juggernauts who will absolutely benefit from that. I have ethical concerns with Google, by the way, but they both are positioning themselves very well. On the pioneer empowerment level, we have Robinhood and Coinbase that are also at the intersection of crypto and empowerment, because they bring trading capabilities to everyone, to retail, to the pioneers. These are very, very strong stocks that are actually in competition with each other. Then, of course, MicroStrategy, Bitcoin, and Ethereum, which are all different things. And I will have a dedicated video on the implosion risk of MicroStrategy that will surprise you. So follow me. Again, this will come out very soon, where I analyze what the hell is going on with MicroStrategy and Bitcoin and everything. And if I buy it or not. And then, of course, Bitcoin itself and Ethereum itself. So this is the greater context to tie it back to Tesla. Tesla is not an isolated thing. It is a stock that has to deliver returns. It does so because we believe it is the future of embodied intelligence. But how does the return and risk profile compare to these other key things? And what is the right blend of things? That is, what we will cover in this channel a little bit more. For now, we wrap it up. So the latest with my valuation model. All of that will come probably August will be tight, but maybe in August, but latest in September, in a few weeks, will come to you, all these models in a new interface, by the way, that I call the Pioneer Operating System and the Capital app. where you can manage your capital and analyze all these things yourself online and see very interesting statistics on the other pioneers. This is all coming, so sign up, go to pioneerlands.net, join us, and the future of capital is being built there by people like you and me, the pioneers. Go there and you see all these cool models, and soon in a very new cloud-based platform. I hope that was interesting, and see you very soon.